You've probably seen some people talking about the ULTY or the ULTY ETF, claiming a massive return from this fund of 60%. Weekly payouts sounds like an absolute dream when it comes to income investors like myself. But here's the thing, the yield and the incredible yield you're thinking might not be exactly what it seems, because when you start looking and breaking down this ETF, how the fund actually generates those insane payouts, it tells a different story with the NAV erosion, the return of capital, and the yield that comes more of an illusion than actual income. So in this video, I want to break down ULTY. It is part of the YieldMax family of ETFs. Now, these funds use option income strategies, mainly selling covered calls. Now, we have seen these absolutely explode in about the last 2 years, collecting premiums from volatile stocks. But this is how and where you are really creating that big yield. Sounds incredibly simple. You sell options, earn steady income, get paid on a weekly basis, and it's completely done. Market looks great, 60% yield, consistent payouts, trending everywhere on social media, and of course, the investment front with these covered called options. But the charts do tell an entire different story. Since its launch, the NAV, its actual share value, has dropped incredibly sharp. Some reports showing declines of 40 to 70%, depending on the timing. So when you've been collecting those really juicy weekly dividends, the underlying capital has been absolutely completely diluted and shrinking. So here's the catch. When we start thinking about distributions from an ETF like this, a lot of it comes from return of capital instead of the actual income generation. It means this ETF is literally paying you back on a weekly basis with the money that you're putting into the ETF. You see the yield number, you see a cash account, feels great, but behind the scenes, you're just getting the investment returned to you on a weekly basis in a piecemeal. In June of 2025, for example, the filing shows 100% of ULTY's payout was a return of capital. Think about that for a minute. That erodes the fund's NAV, and over time makes it very hard for the ETF and almost impossible for them to keep them their substantial payouts that we have in here. So when people are saying a 60% yield, it is not free income. You are depleting your own capital base. So how exactly does this strategy work? This again is kind of how it gets interesting. So ULTY sells called options on a portfolio, and they are focusing on highly volatile assets. Now, if you've looked at YieldMax, they do have a lot in there that track individual stocks. They also have a lot that track individual indexes like the S&P 500 and the NASDAQ 100. That creates income, but it also caps the upside. Now, this is important to know. If those stocks rally, ULTY gives up all of those gains because it's obligated to sell at a strike price. So if the market has an absolute phenomenal day where it's up 10%, you're not going to see the same gain in this ETF. When the market falls, the fund still absorbs all of the losses. So again, if you see a 10% rise in the market, you're not going to see that 10% rise. If you see a 10% dip in the market, you are going to see that 10% dip. So what you get is a very limited upside. You get a full downside potential plus a high turnover at a 1.3% expense ratio. And also the capital is being returned through distributions. So you've got a slow bleeding in value, really disguising the yield that we have on these ETFs. It's like taking $100, paying yourself $5 every single month, and then wondering why you only have $60 left by the end of the year. It is because you're paying yourself back with the capital that we see on this ETF. Now let's look at yield versus the total return. This is pretty interesting. Yield is not total return. Total return increases and includes both the yield and the price movement. If the NAV is falling faster than you're collecting those distributions, the total return might be smaller, or the total return on an ETF like this could be actually negative. Now, some analysts estimate that SE's total return since inception is around 6% when it is annualized, which is the far cry from the 60% headline that they're talking about. And even looking at the 30-day SEC yield, it is close to zero when you look at the measure of the real net income, again, which is close to zero. So the yield you're seeing online isn't income, it's opticals, and the way that they're doing, fueled by option premiums and the return of capital of getting just your own money back. So this does raise a lot of red flags, and really the big ones. First one, sustainability risk. Option income depends on volatility. If the market calms down, your payouts are going to drop incredibly fast or could even stop in their entirety. Number two, there is also a really big capital erosion. Return of capital really chips away from the principal, meaning that if you're putting $10,000 in there, chances are when you go to cash this in, you're going to have a lot less than $10,000, even though you got paid on a weekly basis. Now, the third one, capped upside, you have a full potential when it comes to the downside. It really limits the growth that we see in an ETF like this and doesn't protect against any of the losses in the entirety. And that also comes with a much higher cost when you look at management fees and the turnover that we have within these portfolios. And of course, tax complexity. Consistent ROC payouts could absolutely really complicate your tax situation. The bottom line is this is something to hold for a very short term, very speculative income play, not a sustainable, not a long term investment by any means. So, where does it make sense? We see income driven investors, we see those dividends. ULTY does make sense for someone. Could it be? Possibly, but you have to know exactly who this investor and who these ETFs are really targeting. If you're an experienced trader, if you're using it for really a tactical short term income in a very volatile market in a tiny slice of a portfolio, absolutely it makes sense. But if you're retired, if you're looking for a safe income, looking at the SCHD, looking at JEPI, looking at something like that, this is not the ETF. That is exactly like some of those dividend incomes because this isn't passive income. You're selling option selling strategies wrapped in an ETF, which is built on a ticking clock on the capital that you have invested in there. So you have to know exactly what you're looking into and what you're investing in. Now, again, when it comes to these YieldMax ETFs, we and really do see them around a lot of the same thing. I know the YieldMax, especially when it comes to wrapping itself around a very volatile asset, like thinking of Bitcoin or even Ethereum, something that could have an incredible price movement like cryptocurrency. And we see it with like Palantir, we see it with Nvidia, we see some of these mega big growth companies that you're getting the yield, but again, you're giving up the upside, you're giving up the growth in these ETFs itself, which really does make a big difference. So when you start looking at the 60% yield, it sounds incredible until you realize as an investor exactly what is happening with these. The charts have shown a very steady decline in value, and that's when investors and really pay the price for chasing these extreme yields. And of course, you're not getting any of the gains in there. Yield does not mean growth. You have to understand this. Yield doesn't even mean income. It means it's coming out of your pocket that we have. So before you buy into the hype, you have to know exactly where this payout is coming from. Is it sustainable? Is it just the money coming back to you in that net erosion? Because when you look at the chart, it becomes incredibly crystal clear when you look at this. So if you found this video helpful, hit the like button, subscribe to the channel, chase it, and really share it with someone who is chasing these really, really high ETF yields. And I'll catch you in the next video.